Happy Sunday, traders. This is Captain Jim James coming to you with your daily brief. This is going to be for the week of the 13th through the 17th. I've been cutting down some of the videos that I make, mostly just due to time available, though I will post more videos if I see the need at any point through the week. Last week played out like I expected it to, and as well as the week or the 2 week prior before I took vacation. So unless something changes this week, this will be the only video. Though I do expect another video probably on Wednesday. We'll get into that later with the ES chart. So probably expect a video on Wednesday and then one on Friday. Unless something huge changes in the market, some unknown that we don't know about, this will be your video. And they've worked out very well making these videos just once a week. If anything changes during the day, I'll post on Twitter. So please check me out there. It's Captain Jim James. You just search for me. But, let's quickly rehash before we get into anything here. Let's just talk about, all the videos that I make for you guys. We talked about de-risking ourselves from the market if you're long in stock. I don't really care what Jim and Mary do out in Iowa with their 401k or, I don't know, some person that's just buying stock every day on an app. Those people, they don't care if the market goes up and down. I guess they'll care when it happens, but those are long-term investors. Those are people that are going to buy stocks and hold them for 10, 15 years. They really don't impact you and I, right? And if you're a new Tesla investor, new Apple investor, something like that, and you want to grow your accounts even if you're buying just stock, there are times for you to buy stock, times for you to sell stock, and get back in. And there, more risk comes on as time passes in those stocks as well. And we talked about that in one of the videos where I thought the market is going to head. And I think it's going way higher. We're going to talk about that too today at some point. But except for seasonal downward moves, I think we get a big move up. And we'll talk about why too. But even in that context, let's say you're an Apple. Let's say you're like, I love Apple, right? There's a time to buy Apple and there's a time to sell Apple. Some investors will tell you that they'll sell calls on the stock that they own. There's all kinds of complicated strategies you can use as an investor. I'm a trader, so I don't really deal with those people too much. I deal with growing accounts fast. I deal with you want to see someone that has real money come to the right place, because this is how you make real money in this market. This is how you stop working a real job and you start doing the things that you want to do. So from that perspective, we talked, 2-3 weeks ago? I think we've been talking about it for 4 weeks now. Start de-risking yourself, that the market's going to head higher even though you're going to de-risk yourself. That this is the time to be, you're kind of in my world right now, right? If you're going to be a bull, you're going to day trade and you're going to buy weeklies. You're going to de-risk yourselves from overvalued stock as we take a seasonal hit, right? That's what we're going to do. I mean, you don't have to, but that's what I'm going to do. And that's what most of the big market players do, right? So when they buy into Apple all year long, they need to sell out of that position. So they'll raise the stock price, sell out of it, raise it some more, sell out of it, raise it some more, and sell out of it into a seasonal low, and then go all in. If you get stuck, let's say you bought Apple I think it was last spring or summer, it was at 130, 140 or something. You'll be back towards that. It'll be back at 140, 130 again. It'll only go up incrementally every year because funds need to make money. Traders need to make money. Traders run this market right now too. That's the other thing I haven't really talked too much about, is that the traders are in charge of this market. And I don't know if you know that or not, but you can tell. You can not just, I shouldn't say the traders. And I posted this on Twitter. I post these crayon drawings where I show you how the market used to act and then how it's changed over time. Right now, you've got these high-frequency trading firms that are controlling the market. You've got day traders controlling the market. You've got small hedge funds controlling the market. You have foreign entities controlling the markets. And then you have, behind all that, you've got Jim, Mary, Sue. You've got retail increasing its power in the market. And then you have 401ks, and you've got pension funds. You have all these influences in the market right now. We might talk a little bit about TLT and that kind of stuff later on if I can get to it. But if not, right now, this market, we're coming into a seasonal down period. You have to understand that. That's what's that's going to happen. It's going to happen now, from now until springtime. And there's two questions on the table right now, right? But this comes up every single year. And that is, do we go higher from here, or are we coming into some kind of Armageddon? Those are fair questions, I guess. They are. We are high, but if you have that bear thesis, we are going to go so much higher for that bear thesis to actually play out. If we come down right now, let's say we go down and we drop 15%, then that crushes any bear thesis. If we were to burn 15% off the market from now until even March, that would destroy the bear thesis. It would destroy the bubble thesis. It might show more of a controlled market still, but that's not the bear thesis. For the bear thesis to play out, you can't really. It's hard to find these things, but you can find old TV news stories. You're going to see, you will see. And this is another thing. You will see Apple go up 4%, 5% in a day. Some people argue that bubbles today will roll over. I've heard that argument as well, because we have rolled over somewhat in the past, but they'll use the numbers to say, in 2007, 2008, it took a year for it to roll over. But in reality, once we hit that peak way back in 2007, man, it was fucking bonkers. And you'll see that bonkers if we truly are in a bubble. You will see this mad rush to the top. And if you think this summer was a mad rush to the top, you're fucking crazy, dude. There ain't no fucking way this was a mad rush to the top. No way, no how. We saw crazier last year. We saw 3%, 4%, 5% fucking swings in a day last year. This shit's nothing. Just when you think you've seen it all, you will see, if we're actually in a bubble, you will see valuations go bonkers. Anyways, so my thesis right now, until it proves otherwise, which it takes, I talked about this on Twitter this week, it takes quarters, takes months and months to see a real bear market. It takes months to see that we're in an Armageddon type phase. No, stocks don't just go down. Even if we go to a bear market, they just don't go down. They go down, but they don't go down like you're going to get one big red fucking bar that doesn't fucking end for months on end. That shit ain't ever happening. It might happen, but if you think you're going to watch some stupid fucking movie like Margin Call, and you think that fucking one day you're going to be that asshole holding those fucking puts or those shorts, and you're getting fucking paid, there's like a 1 in 1,000 chance you're that guy. Maybe. So I guess that's a good chance, but for you to hold those shorts every day leading that, you're going to lose. You don't have that endless funding that Mike Burry has. And I look up to Mike Burry, but there's a lot of stuff about Mike Burry that people don't realize, how much fucking money he lost that he could have made if he had been long that market. Forget what he brought his firm. The money that he missed during that time period was astounding. That same thing happened in the Japanese markets too, in Japan. A bunch of U.S. hedge funds tried to short that fucking market for a decade. And they went out of business, a bunch went out of business. They could have made hand over fist more money than they ever made when it finally did fall as well. So keep that in mind as we move forward. Right now, let's look at what's going to happen this week, or what we think is going to happen this week. Well, we have the economic calendar, federal budget on Mondays. I'm expecting no news. And then on Tuesday, we have inflation, right? We've got CPI, core CPI. And if we get an inflation spike on Tuesday, it does bring up whether the Fed needs to change its policy. So look for that on Tuesday. That can be some negative news. And then we've got industrial production figures. That'll be the focus on Wednesday. You've got the industrial production at 9:15, and this really does set up for Thursday for the retail sales, the Philly Fed manufacturing PMI, and the weekly jobless claims. That Wednesday actually really does set up these numbers that are coming out on Thursday. The retail sales and the jobless claims are going to be key and probably sets the market to fall. And then for Friday, we've got the University of Michigan Consumer Sentiment Index. Surprisingly, this thing is supposed to not make much of a fucking difference, but it has been in this year. So use it as like a nail in the coffin if we go down on Thursday to hammer that in on Friday. Or if the numbers are good on Thursday, that it'll be a pump into Friday, right? They're going to use these reports and news articles or news reports to pump or dump the market. And that leads me into one other thing. You know, for all that fucking noise that we heard in the news last week, the PPIs in this market, there's still there's still people long in this market. And to not see us dump as deep as I would have expected with the news that was out just shows how fucking fake shit is in this market, you know? I went on this big rant in another video about Robert Kaplan because I posted about him getting bullish on August 21st, right before the meeting in Wyoming. And it was shocking, you know? He was trying to close positions, and there's a bunch of other shit involved in that, but when you think you have someone on your side, you don't. When you think the news is on your side, it's not. The news is there to convey a message to you, but not to drink the Kool-Aid. That's for when we go up, and that's for when we go down as well. So if, let's say, Cathie Wood's trying to sell out of her Tesla position heading into OPEX, yeah, she's going to send someone on CNBC to say that they think we're going to 485 end of year, right? They need to sell into somebody. That's you. And when you get a bear that comes on and tells you that we're going to lose 15% of the market, that's a key for you to sell. But should you believe that we're actually going to 15% down? Fuck no. You have to play this market as we have it right now, as far as you can see it. As far as you can see the next OPEX, or even right now, it seems like the weekly OPEXs, the daily OPEXs. I mean, seriously. We're getting 10-point swings in a week, 3 days sometimes. It's just fucking insanity. It's insane. It's pure insanity. So anyways, keep this stuff in front of you this week. I think this does set us up for some form of a recovery into Monday. Let's look at ES real quick. And I posted this chart the other day. A couple things on this too. I trade cash market options. That's what I trade. You don't have to trade that. You can trade round the clock 24 hours a day if you like. But I do my research on the futures contracts. Do the research on the futures contracts. I should have put up the December contract here, but whatever. We roll into Friday's contract, or the December contract on Friday. But I do my research on the futures contracts so I get a better picture of where we are and where we're heading. And then I execute my trades on the cash market on like SPY, IWM, on the Qs. And I'll transfer this information over to those charts. And I use Webull. It's a holdover. I've traded on in the past. I don't trade on Webull anymore. But they have the fastest charts out there that you don't pay for, guaranteed. I'll put their charts in terms of information over the internet against anyone, even any paid. They might be slightly slower than some of the best day trading platforms, but there's no other software out there. I'm sorry, there's no other platform out there that you can get information that you need. And I need this. I play FDs all day long, so if I'm day trading all day long playing FDs, I need to know to the millisecond where we're going, right? So that's why I trade. I use that as my battle map heading into the day. But the reason I posted this chart with a line underneath it the other day was because I've made videos on this in the past, right? I've made videos on buying, when should you be a bull buying dips, right? I talked to you about if you had only made trades in these times. I've made these videos in the past where I say if you bought on these lines that you could have just bought these and you would be rich. That's it. You'd be rich. If you didn't have a gambling problem betting on this market, This is all you had to buy this whole entire year. And this works itself out every year, whether you believe that or not. If the trend is going up or if the trend is going down, if you buy these lines, they print. And the same holds true generally for the bearish view, right? So if you're a bear, generally it eventually comes down. If you're to buy put spreads up here all year long, they're eventually going to print. So I put this up on Friday because this is basic right here. Now, if you look at the MAs, well, I'll put the MAs up on this chart so you can see it's a little bit lower over here, the 50 MA. And I use the 50. I use the 50. I use the 100. I use the 150 and the 200. And I will also use VWAP for day trading when I'm trading. But the key here is, I think the 50 is somewhere. I think the 50 is some. I'll have to look at the 50 on the. That's the 50 right here. So let's make this the 50. I think this is the 50. I have to put up the moving averages. So we have a little bit more that we could come down here. But the key is that if you buy here, or if you bought here all year long, it wouldn't matter. It wouldn't matter if this crashed through today or Monday, because you've won 9 out of 10 times this year. That's what's important. And let's see if we can get this. We can bring this down a little bit. And we can add another one down here somewhere for the doom and gloomers. We dip even deeper. If you look at the 50 MA, it's a little bit lower than here. You can do that. That's no problem doing that. You can make this smaller, I guess. Maybe not. You can bring this up a little bit more. So we're not ultra bear doom and gloom. But you have to consider these when we come down. Let me look. Maybe I should look back for it. I don't know if I should look back with you. Let's just look right here. This is September 20th, right, of 2020. And even when we came down in this time period, you can see when we came down in this time period, it wasn't a straight line down. And whenever you do these drops like this, right, if there's continued downward movement, it's usually a violent pullback up. We didn't get that here. We actually stopped, right? We came back up for further decline. But you see that we go up and down while we're on a decline. So if you're a bear, unless you're buying fucking put spreads or some kind, or some kind of theta put theta strategy that you can pull legs off, you can't just be buying fucking puts and expect these things to print all the way down. It's just not going to happen. So you have to consider that from your bull thesis or your bear thesis. If you hear people, let's say this was this weekend right here, right? So let's say we fell here, and you hear bears saying, "Oh, next day we're going to burn again," right? Well, we didn't, right? We came back up and we came back down over here. So when you hear bears screaming that we're going to keep going down, it typically doesn't happen. It's typically FOMOing. It's just like bulls buying tops over here and telling you that the next stop is up here. When the roars get louder and louder, typically there's going to be a pullback in either direction, right? That's if you're a bull, if you hear everybody saying buy this. If you're a bear, hear a bear saying buy this down here or here or here or here, it's typically going to go the other way. And that's the case. That's what I heard over the weekend. That's what I heard Friday and through the weekend was this drumbeat that we're going down farther over here. So we're gonna go a little bit closer over here. We're gonna take it in a little bit. Now, if we gap down into Monday, I want you to understand that the more we gap down, the more violent the swing up is going to be. Be aware of that. Be aware of that. So my example would be this. So let's say we continue our downward move, right? If you spring down through here, you should expect more than 450. If we swing down here, you better be expecting all-time highs once again. Keep that in mind. So if you're expecting a gap down on Monday morning, you see us head down here to, let's call it 444.25 or lower, I will guarantee you that you will see. I'm not guarantee. I'll tell you that it's about an 80 to 90% chance that you will see all-time highs once again. Almost guaranteed. If we are green tomorrow morning, you're going to be looking for somewhere between, let's put these in, somewhere between 450 or 45.0875, right? That's where things become unsafe, to wherever this yellow line is right here. It could be anywhere, right? It could be 415. It could come straight up though to 445.24. So my plan for Monday is to look to see where we open. If we open with a gap down, I'll buy that gap down with a lot of shit. With a lot of shit, I'll probably go in like 30% of my account. Anything down here, I'm in for 10% heading up for a play up here, and there is another resistance here. So we'll put that one down right there. This resistance is possible as well. You can see that's the 14th. You can see this right here. We'll get closer on this. This is a good place to be looking right here, right? Let's look at OPEX, right? Figure Friday is OPEX, and is the 14th Wednesday? 15th. So the 15th, we have another small OPEX. That's right here. Right, then we've got Friday OPEX, and that is 17th. Let's call that the 17th. We're looking for 1600. Let's make this, nope, I'm going the wrong way down here. 1600 right there. So tomorrow, right, I'm looking to buy anything from, I'm looking to buy anything that's at 4430.25 to anywhere below 4361. I think you're smoking crack if you think you're going that low, but let's just say you did. Anything below here I'm buying with spreads. I'm going to go probably in with a third of my account, and I'm going to buy a shit ton of call FDs. I have call FDs for Monday here. It could be a small, but even if we come down here and touch right here, I'm just going to buy more call FDs, because one way or another, this isn't going to continue down. It's not going any deeper than this right here. You can fucking put that in your bank account and bank on it. So that's the deal, is to go long here. The other thing too was on Friday, right at the close, I posted on Twitter. I try to watch the high frequency traders, what they're doing, and they fucking came out of all their puts right at the fucking bell, and they went balls deep on 913 450C. I didn't go that crazy. I went 448s. Sometimes they'll jump around on Mondays. They'll use it to hold it, and then they'll jump higher to push it higher. There's probably more money in the 450s. They were only like 25 or 30 cents or something stupid like that. Those could be like 3,000% baggers. It could be crazy if we get this low. But anyways, that's neither here nor there. So tomorrow, that's what you're looking for. You're looking for some sort of bottom here, either at this 44.53. The slingshot up, if we go straight green, it will hit a ceiling faster and maybe continue back down. I don't expect it to continue to go up. It could possibly take until Wednesday to get up to this 450 number up here. That's a possibility as well. You could put another resistance if you're on FDs. If we don't go any deeper, you'd probably want to sell at some point around 4488 or 448.80 if you're an FD holder. If there's no further decline, you'll look for 448, a pullback. The pullback would be somewhere in here, right? We know it's going to be somewhere in here. So you'd expect something. Let me see if I can draw this. Let's say we don't go any deeper. If you don't go any deeper, you're going to look for something like this, down, and then up towards this 450 by Wednesday at some point. If we dip lower down to here, you're going to probably see a spike up to 450 no later than Tuesday, if not same day. That's how vicious and violent it could be. if you were to see something like this, anywhere down in here, you can expect all-time highs, guaranteed. You can expect you got banks that are going to want to go short, but then you've got some serious players that will get greedy, and they will ring this. They will ring a bell, and it probably take them a week. You don't think so, but I guarantee it. They'll ring a bell doing something crazy like this. So think about this as the week progresses, or as Monday progresses. What you're really looking to do is position yourself for a few things, right? So on Monday, wait a minute. On Monday, you're looking to see where we start the day and how far it does go up, and into from now until Wednesday. My thought would be that they try to pin it somewhere in here for a decline into OPEX on Friday, and I'm going to expect further decline for the end of September into October. So you're looking to take this long, beginning of the week, and you are looking for where to get positioning for further decline. And where is that further decline? Now, if we go way down here, don't expect decline. Just don't even bother. Okay? Just don't. If you see a gap down to here tomorrow, don't expect further decline. We're going up. But if, let's say we start Monday green over here, this yellow line right here, and I'll put one more in. Let's call it this line over here. You're going to look for two things to happen. You're going to look for further to decline into, let's see where we are right here. So this is September 24th, 25th, something like that. You'd be looking to grab some in-the-money put spreads to be safe in case we continue to go up. And then if you're confirmed that we're going down, right, if we start, let's say let me get this thing up here. So let's say we come up here, somewhere in this area here or here, right? You can buy in the money put spreads up here. And let's say we break through this resistance, right? You can always wait for us to come back down to sell out of those puts to get better positioning up above, right? But if we hit resistance here, then you can start to take more aggressive put spreads into end of September, somewhere down around this 440 number, maybe even possibly down to 436 if you wanted to get real aggressive with it. But you want to be looking for some form of resistance levels to get your risk on. You're looking for these levels here to add more and more risk in puts. But don't wait for this one right here and go, okay, we're going to 436 from this first resistance level. Does that make sense? You can start adding in the money, slightly outside the money, more outside the money, heavy outside the money to go short over here. Remember also too that when these levels here are broken, the more we break these levels over here, this one and specifically this one, shorts start to come off the market. There will be squeezes as we go up. So always be aware of those things as we play coming into this week. Let's look at NQ quickly. This is my chart from last week in NQ. I didn't delete it. And we came pretty close, right? We could possibly get this gap down to 15,384 on Monday. I was looking at some of the tech companies that could push us up on Monday. You're going to be looking for like the Zooms. You're going to be looking for beaten down tech companies that could push this back up. Nasdaq does look like it's the most bullish or has the most range expansion possibility over time, right? Take a look here. You can see this. You can see that there's a gap down here that could easily be broken if we have failure over here at 15,309, right? We'd certainly gap down to here and possibly, let's take a look back over here over time. Yeah, there's no gap potential down here. This will be a fight all the way down, which is what I expect it to be. You might have some gap downs as we work our way down over here. This is how I expect Nasdaq to start to come down. You'll start to see us making new resistance levels, new support levels as we head down. I don't see Nasdaq falling the way that you think it's going to fall. You have to understand that these companies have to sell out of their positions. I would be real concerned here at 15,265. And we all know that we get real bearish underneath 14,800, right? That's still in play. It goes up a little bit every week. It's at 14,800 or 14,814 now. I think it was 14,900 a few weeks ago. This is where you get bearish, and you're going to play this chart. So if you should be making this chart for yourself, right? And I'm going to do something for you real quick. I'm going to turn this into a different color. Make that blue. Make this blue right here. Okay. So I'm going to use a cursor right now. So you don't get bearish, right? You don't be buying puts on the Qs right here, right? You should be closing your Qs somewhere in here, waiting for it to drop below, right? Bounce back up and fail, and then you start buying your puts for the next leg down. Does that make any sense to any of you out there? I think that the traders with experience probably, yeah, of course it does, right? Or you're going to be looking for a double tap and then a failure. I shouldn't even say the one. This is more of what. That one tap is usually when you're gapping. You'll see one and then we go straight down. But this is what you're looking for to start. You don't even want to be buying short here. You want to be waiting for that second pump. Or I guess you could put some risk on here. But you're going to be waiting for this next leg down. You're not buying up here and just holding, hoping it keeps going down. You're going to take this leg down, take this leg down, take this leg down. That's how you make money. It sucks, but that's how it is. Because what can happen, let's say you bought this on Friday, right? And let's say you bought that on Friday, and we do this shit here. You're fucked. You didn't get to take your profit. You didn't get to re-enter or look for better positioning. There's so many negatives to you buying puts over here in this area than it was for you to take profit and wait for this to happen down here, okay? So you can use this chart here to see where resistance levels are, right? We know we have support here. We know it because we had it here. We know it because we didn't go any deeper on Friday over here. So you want to be, and everybody else knows it too. Banks know it. Traders know it. High frequency trading firms know it. Everybody knows it. And if you don't know it, right, you're the one guy that doesn't know. And so you're the one guy that's going to get fucked. And there are people that are going to be looking to buy this to go back up, right? Banks, institutions, traders, high-frequency trading firms are going to look for relief rally. They're also going to be looking for better positioning somewhere up here. So my call for Monday is possible we gap down to 15,375, but then it's going to shoot back up, and you're going to be looking to buy calls down here somewhere around 15,382, possibly even as low as 15,309, and riding it back up to no less than 15,520. Or 15,580. Sometimes we stall in the middle here. This is no man's land, right? You know, you shouldn't be entering positions here. You shouldn't be hoping and guessing by the time we get here. If you want to leave some on, take it higher to this 15. If you want to leave it on, take it higher. Some of your position on, take it higher to 15,760. You can. You can also add this in now that you can see that the market's rolling over. Right? You can start to see that right there. Start to see this defined channel as we head down. I would all day long be looking to take a long position here and exiting somewhere up here at 15,633 all day long. And I'm sure there's like much smarter people and programs and AIs that know about this than I do. So use this chart for Nasdaq heading into Monday, and be sure that they're going to buy this over here. No, they're not gapping down to 15,142. I guess it's possible. Just know, though, if we gap down to this 15,141, you're going to start seeing, like, Apple. People are going to want to buy it. You're going to see people want to buy Amazon again. So keep this in mind when you're playing these indexes. You start getting down in here, right? You're going to see a bull run. Guaranteed, okay? So keep these numbers in mind. You can see this here, 15,377. 15,309. There's a liquidity grab possibly down here if there is a gap down. And then for sure, if you're a bull, all balls to the walls in 15,150. Unless you need some sort of news that we don't know yet to be getting down here. Okay? Or unless in OPEX, they're thinking, hey, on Wednesday, we're going to take it all the way down here and take this long. I guess that would be scenario B or C or whatever. Next one's going to be the rut. This is from last week. I think I'm positive I posted this chart for you last week, and you can see where we hit right in our trading area. Right, we talked about how the rut would go, and sure enough, it did. So we're gonna look. I'm gonna clear the rut because I want to show you guys something about the rut that interests me. The rut is kind of my favorite thing, man. Like I do the rut often. The rut pays very well. It is better than a lot of stocks to be playing. This is like I'm playing Amazon. This shit's dope. Like, it really is. I have some concern here. We're gonna look at the rut, and here's my concern with the rut. Okay. Let's look at the concern on the rut, because I've got some concern here. So on the rut, I looked back on the rut going back as far as I could to see how the rut typically plays out. The one issue we have right here is that this is, again, no man's land, right? You don't want to be taking positions here. This is a bearish picture as the rut goes, right? The one thing that I noticed about the rut is that whenever we're in this middle area here, you can see we come up, we come down, right? We still tend to come down for a grab higher. When we come down through the middle, right, we tend to keep coming down, right? We came up here, we came down, right, but we didn't hit we didn't hit this upper resistance, but we did eventually try to make another push up here. So over here, we did hit resistance, right? So I'm not expecting us to make this second push up, right? But we'll come back down all the way up, one more tag above, we go coast to coast, right? Come down here. We should have had that tag, but we didn't, but we did eventually get that tag. So my take on IWM is that I'm bearish on it, and I've been bearish on it for some time now. And I posted on Twitter a bunch of puts, big puts that are looking for this 209, somewhere in this 209 number. So I'm bearish on the mini, but I would not be taking a new position here until there's some sort of confirmation down below. Let's see if we can get that right there. Or not down below. I'm gonna show it to you in a smaller time frame. But we're gonna put some support levels in here. You can start to see where the push up is. Somewhere right in here, believe it or not. And let's look at this level here. This is possible too. This is minor. Some minor support in here. Let's get this down in a closer time frame. You can start to see it, right? Let's get rid of this. This is really what you're looking for, right? This is starting to become easier to see what you're playing here. So let's start from the bearish perspective, right? We're looking to sell. Every time we hit this blue line, we're looking to sell this down. Every time we get up here, you're going to be looking to sell this down. If you want to get bullish that maybe we're going up on IWM, what you're looking for is well, before I do that, hold on. Before I put that one in, you are looking for somewhere in here. If you're this would be the bull thesis up above here. Call this the bull thesis. What you're looking for is this. So if you're a bull, right? If you want to be like, oh, we're going to get bullish. Well, the thing that you're looking for is some sort of over a rest, and then up, right? That's what you're looking for. No, you don't want to play this because there's a good chance that it's going to go. Wait a minute here. Let's see what I got going on here. There's a good chance that you're going to go up here and head down. There's not really a lot of skin in this, you know? You really want to see us get through here and then grab this and go, because typically you can actually come down over this and come back down. You're looking for a rest on some form of support for a move higher. So right now I'm not buying into a bullish, or I'm bearish on IWM, but no way in hell am I opening, wait a minute. No way in hell am I opening a position, any position, nothing neutral, nothing bearish, nothing bullish. Although this is bearish, definitely. I would be waiting for IWM to see what it's going to do. Is it going to come up for a liquidity grab and then take a bearish position? Does it come over here and start to bounce around for a push up? Then I'd go long. And if this just keeps going down, I will take a bearish position if we come down, bounce back up in here, and then head lower, right? The time to take a bearish position in the IWM was on the 10th at 1:30 in the, well, yeah, 1 or 2, is it 1? Right, 1:30 in the afternoon. You should have taken this bearish position, and you could have actually held this bearish position in my view until proven otherwise, heading down to my price target of 209. And I think I even put that on an earlier video that I was bearish on IWM into middle of September, and that I would get more bearish on SPY and the Qs heading into October, and that you would see towards the end of September IWM become bullish into October. You'll see IWM fall before you see SPY and the Qs fall, and you'll see IWM recover before you see the SPY and the Qs recover. And so far this is playing out across all three indexes. Nothing's changed. So anyways, we're going to look at a couple more things here. We're going to definitely look at Tesla, and we're going to talk about Tesla. I seem to get a lot of people, a lot of bulls on Tesla, continue to ask me the same questions, and I don't understand how we're here with Tesla with you being a bull. If you're a bull, you know where the buy zones are. You know where to take risk. You know where to start taking on risk. I tell this to bulls and bears no matter what we're doing, right? Yes, you might miss one huge 100-point rip on Tesla, but you would have made so much more on this run. This goes back to March. By buying these zones, it was ridiculous. Tesla's been a printing machine since March. And if you're a new bull, during this time period, if you had just played all of these rips and then bought stock on the dips and more calls, you should be at a point at this point where you could start selling outside the money calls on Tesla. Another thing to be aware of is that Cathie Woods, whether you want to hear this or not, and lots of other people, because they even, like, let's say you have a hedge fund that shorts Cathie, they're going to extra short Cathie right before an OPEX. And so, did you get what I'm saying? And then you've got longtime Tesla bulls that already know that Cathie's selling out of her Tesla position, and that she's going to be buyback in her Tesla position right after OPEX. And what's hilarious about this is that every time she does this, there are all these articles that come out afterwards, and they say, oh, look, she bought XYZ stock and it's still falling. She doesn't care. And the reason she doesn't care is because she's selling out of these longs here, and as this negative news is coming out, she's able to buy dirt cheap down here, right, and ride this up for the next quarter. She might be taking longs here to ride up not into, let's say, December, but to ride up into March or even May of next year. So keep that in mind. I do see Tesla still getting to 800 and 1,000 this year, and I do see Cathie Woods going long here, but she certainly does. She's been long since March. Let's look at the 1 year on this. Put it back on auto. And she's been long. So Cathie's been long down here. She got long down here. She got long down here, right? So let's just say Cathie Woods got long at 552. We're at 736. This is a time, or 760, I think, right? So this is a time for her to shave some of her position. She probably leaves part of her position in, and she's looking to get some liquidity down here for the next run up. So start to keep, or consider that as we move forward. You shouldn't be, I've been making these videos, I've been on Twitter long enough for any of you that have been following me, that I should have made you into a millionaire at this point. There's no reason. I've told you every time when to buy these bottoms hit down here. And even this one here, this is on August 17th. Nothing that you've bought should be in the red at this point, okay? So if you're a bull, you're going to be looking for a continued downward movement in Tesla. You can day trade it if you'd like. But if it was me, and I said this in my last video last week, I'm waiting for us to come down into this area here, this 706, this 695. I know you don't think it's ever coming down here again, 681, 660. Anywhere down in here, I'm going to start putting more risk on. If you want to get real risky, if you're rich, you made a ton of money this year and want to take on some risk, sure. You can buy this for a push higher. You can buy this on Monday morning at 732, 736. You can buy it slightly lower. You can start adding risk on as we head down here to this first major support down here at 704. You can put some call spreads on right now that expire in December, and you really won't care if we swing down, right? You're really not going to care much heading into, let's say, December 31st or 15th or whatever. If you're impatient, you can. But Tesla doesn't trade like it used to trade. It trades like it's part of the SPY, like it's part of an index. It's growing up slightly. It's going to even have another period down the road. You know, to think that Tesla's not going to hit 1,000 or 1,200 or 1,500 or 2,000 or 3,000 and not have another year where it comes down is just implausible. It's insane. So when you're a Tesla investor and a Tesla believer, there are times when you buy Tesla, and there are times when you go long in Tesla, and there's times where you sit on your hands. If you're a new Tesla investor, I always give when to be buying Tesla, and I've said this on Tuesday's video. I told you I'm not taking any longs in Tesla until 704 or 695, and even as low as 655. This is where I start throwing risk on in Tesla. Can you day trade Tesla? Yes. Can you take risk on in Tesla at any time and it'll go up 100 points? Yes. And I never short Tesla. I'm not that guy. I have a philosophical reason I don't do it. I have this thing about humankind where I think we're going to get fucked by artificial intelligence. And I think our government needs anything that they can get to fight it. Well, to fight it with their own AI. I don't think that there's any private entity that's going to take over the world. I think that it's going to be one of the governments. And I think Tesla's wrapped up with the government. I know that they are. So, or Elon Musk is. So, and Tesla. Boring, it's like the Boring Company. Everybody talks about the Boring Company, how stupid it is. The Boring Company has to do with Mars. It has nothing to do with our world. It has to do with the expansion of the human race in other planets in case there is something real bad that happens here on Earth. We need to be able to get off Earth if we have to. So anyways, that's a whole other video. But if you are new, I guess there will always be new Tesla bulls that are coming into play Tesla. One of my rules is I never short Tesla. But if you're going to take risk on Tesla, there are places to do it. And this is definitely the place. Another thing to keep into consideration is bears are looking for a double top up here, okay? And that double top, I'm going to draw it in for you guys. Watch where I draw this line. Okay, you see this come down here? See this come up here? And you see this come down here? And then a swoop back up, right? Now, if you're a bear or if you're a bull, be aware that this could be a double top forming up here, even if we get up to this 892. And bears are going to attack this if we get up here. So be conscious of this as we move into December, what this means, that we're coming down big time. So keep that in mind as we move forward. This is still a bullish context for Tesla. That's all I've got for you guys today. I do want to ask you to like and subscribe these videos. I ask, but now I'm telling you to do it. This takes a lot of my time to do this research. Keep listening, please, to me talk. It takes a lot of time and effort. I don't charge any money for this content. This is my own due diligence that I do. If I make any of you guys money out there, I don't want your money, but I do want you to push my shit on Twitter. Tell your friends, especially if you find a new bull or a new bear, even bears. I put bear plays out all day long, all the time. You can extrapolate bear plays from my bull positions as well, but because I don't ask for anything in return, I do ask for you guys to do that. It really helps me. It helps it drives me to make more videos. Trust me, the more help I get here, the more apt I am to make more content for you guys. Because it's a lot of work. It's a lot of work on Twitter. It's a lot of work on YouTube. And that's it. That's all I got to say. I hope you guys have a great week ahead of you. Hope none of you get blown out. If you are a bear, you need to be taking your positions just like a good bull does. Or I shouldn't say that. If you're a bull or a bear, stop buying bottoms if you're a bull or a bear, and stop buying tops if you're a bull. And this is from not just a macro level, but down to a weekly and a daily level. Buying puts on Friday at the close, they should have been fucking bought on Tuesday. No fucking bear in his right mind opened puts on Tuesday and then bought puts on Friday in the close unless they'd already made a shit ton of money. Now, if that bear is doing that because he's like, fuck it, I'll throw another 10% on us possibly going down more, that's fine. But if you're a new bear and you waited to buy puts on Friday at fucking 4 o'clock in the afternoon, that was not the right move, okay? And that goes for bulls when we're on highs, right? If we're at all-time highs, we shouldn't be buying tops and then screaming about it on social media how it's only going to go up. That serves no good for anybody. And I don't hate bears. I fuck with bears often. I'm a bull. I'm a reformed bear. But I don't hate bulls or bears. I don't hate anybody, any trader. I love all of you. But you guys got to know when to be entering your trades and timing your trades. It is critical for you to be knowing when to enter these trades and knowing when to exit them. Because that's how you get blown out. It really is. You won't last. And you won't last in this business by taking low probability trades. You'll win a few of them. You'll see that one asshole that he's like, I just made fucking $300,000 or $1 million or something stupid like that. But I'm fucking telling you, I've been doing this shit so long. Those guys will lose all their money. I don't give a fuck if they made $3 million. As a matter of fact, there's just saw a guy talking about how he made $3 million and he's down to $1 million right now on Wall Street Bets this week. So please take your money and run when you can and look for the next position. Even if you miss, let's say tomorrow we drop and you're like, fuck, I closed my short on Friday. What the fuck do you care? You fucking made money all week long. You didn't need that last 10%. You just did it. You don't. You need to be waiting for the proper positioning to get short again if you're a bear. And that goes for fucking bulls too. You can day trade bullish positions, right? You can always day trade, hold a position for 15 minutes or something. But if you're looking to go long, there are times to go long as a bull. And we're coming into one right now. So there you go. Okay. So you all have a great week. I appreciate all of your interacting with me on Twitter, and I'll catch you out there on the floor.